ABC were three partners sharing profits and losses in the ratio of 2:2:1. And this was the balance sheet as at 31st December. A's capital 30,000, B's capital 20,000, C's capital 10,000. Creditors 10,000, total 70,000. Building 60,000, cash 10,000, total 70,000. Creditors agreed to take 10% of building and cash of rupees 1,000 in full settlement. B agreed to take 50% of building at rupees 50,000. Remaining building was sold at rupees 20,000. Realization expenses came to 6,000. Pass necessary journal entries and make ledgers. So first of all, leave all the additional information and focus on the balance sheet. Capital of A, B, C cannot be touched, but creditors, all liabilities must be debited just now. So creditors account debit rupees 10,000 to realization account 10,000. Then come on the asset side. All assets must be credited now to close them. So realization to building rupees 60,000, we cannot touch cash account. So at this moment the all accounts are closed and we have got only three accounts: capital account, cash account and realization account. So in the further journal entries, only three accounts will get involved, not any other else. So first of all, let's analyze the creditors through this graph. There are creditors for rupees 10,000. So these creditors payments were split into two parts. One part was settled by cash and the second part was settled by building. First part was settled by 1,000 rupees in cash and another part must be settled by rupees 9,000. It means the creditors took the building at the value of rupees 9,000 and this building was 10% of the total building. And now let's jump to building. The value of building as per our books was 60,000. Let's split the building into three parts in our graphics. First part is 10%, which was taken by creditor, and the second part is 50%. It was taken by B, because it's clearly stated in our question B agreed to take 50% of building at rupees 50,000. It means 10% is gone, 50% is gone, and the remaining part means third part is 40%. So first part of 10% was taken by creditors at rupees 9,000 and the second part of 50% was taken by B at rupees 50,000 and 40%, the third part, was sold in the market for rupees 20,000. So let's take all the items one by one. Creditors took 1,000 rupees in cash. The journal entry will be realization account debit to cash rupees 1,000. Then creditors agreed to take building at rupees 9,000. If creditors take any asset from the firm as a settlement, there is no journal entry for that. Now come to the building. First part of 10% was taken by creditor for 9,000. If any part of asset or full asset is given to the creditor for the settlement, there is no journal entry for that. Now, second part of 50% was taken by B at rupees 50,000 rupees. So journal entry will be B's capital account debit to realization account rupees 50,000. Then 40%, the third part, was sold for rupees 20,000 and the journal entry will be cash account debit to realization account rupees 20,000. In this way all assets and liabilities are settled and realization expenses came to rupees 6,000 and the journal entry will be realization account debit to cash account rupees 6,000. Now leave the space for profit or loss on realization account, then three journal entries for A's capital, B's capital and C's capital account, means their settlement. So first of all, let's prepare realization account. By creditors 10,000 to building 60,000, by cash rupees 20,000 for building, and to cash 1,000 for creditors, to cash rupees 6,000 for expenses. Then by B's capital rupees 50,000 for building, then to profit transfer to A, B, C in the ratio of 2:1. 5,200, 5,200, 2,600 and 13,000 in the outer column. Total 80,000 on both sides. So we should pass the journal entry. We have already left the space. Realization account debit to A's capital, to B's capital, to C's capital. 13,000, 5,200, 5,200, 2,600. Now this is the turn of capital accounts. By balance BD 30,000, 20,000, 10,000. To realization 50,000 in B's column for building. Then by realization for profit 5,200, 5,200, 2,600. Then by cash 24,800 in B's column, because in this situation the total of debit side for B's column is higher than credit side. It means the firm will recover money from B for the final settlement, and in the bracket you can write down final settlement. And on debit side, to cash 35,200 in A's column and 12,600 in C's column for the final settlement. And the total on both sides 35,200, 50,000, 12,600. Be careful. During the course of final settlement, the firm has received money from B, but firm has paid money to A and C. So let's move to journal entries. We have already left the space for the journal entries of final settlement. So cash account debit to B's capital 24,800, A's capital account debit to cash 35,200, C's capital account debit to cash 12,600. Now this is the turn of cash account. To balance BD 10,000, to realization 20,000 for building, by realization 1,000 for creditors, by realization 6,000 for expenses. By A's capital final settlement 35,200, by C's capital account final settlement 12,600. To B's capital final settlement 24,800. Total on both sides 54,800. There is no balance CD, means no closing balance of cash. It means cash account is totally closed, capital accounts are totally closed, and realization account is totally closed.